All right, welcome back to Mike's Millionaire Moves, protecting your wealth, life insurance, legacy, and generational wealth. I have Nicolette with me, and I have Vanessa with me today.
A lot of people think life insurance is a complicated topic, but it's really not.
But I had no clue.
If you don't want the high premium for yourself every month, split it up into gifting.
And a lot of people don't realize that. All right, welcome back to Mike's Millionaire Moves, protecting your wealth, life insurance, legacy, and generational wealth. I have Nicolette with me, and I have Vanessa with me today. How are you guys doing?
Good, thank you.
Thank you.
So today we're talking about something super important that most people don't think about, life insurance. What happens to you once something bad happens? How does your family respond? What are you leaving them with? And so we brought Nicolette on here today to give us the spill on that, to educate us and educate you guys on all of the information that she's given us over the years. So we're excited to have her. Welcome.
Thank you. So I'm Nicolette Namdali with New York Life. I'm here to talk about life insurance. A lot of people think life insurance is a complicated topic, but it's really not. Knowing someone who could break down life insurance to you is probably one of the best ways to figure out what your needs and wants are and what those goals are for your family.
Right. So one of the things is, like, and you hear it all the time, and I think, Vanessa went through it with her own father, right? She thought everything was set up, and then once they passed, she found all of this other stuff that had to be taken care of. And it's a very stressful time because you lost a family member, right? You're mourning, but now you have this huge thing over your head. And if you weren't set up correctly, then it just brings that much more stress, right?
That's true. Part of it is not having an agent that's actually managing your file. So that if you don't have someone that is going to bat for you and they met your family while you were alive, it's a little hard for someone to reach out, to deliver the check, to do all of the footwork for you on that side of the fence. So having somebody that you can talk to, like a life insurance agent, doesn't cost you anything, right? You're paying your premium. It comes as a part of the premium package. If you do have a life insurance agent that you haven't spoken to in years, there's a problem.
Right. So going back to that, give us a little bit of your story, how you got into it. What keeps you so passionate about it where you're wanting to do it every day?
So I realized that this was kind of a legal loophole in the system, right? Life insurance is one of those little things that once you find out about it and what it can do for you while you're living and after you've passed on, it's something that could literally change your lineage, right? So when people talk about legacy, leaving legacy, it's not just leaving a death benefit, it's like leaving your heirs with lineage. So 3, 4, 5, even 10, 20 generations from now, you'll be spoken of almost like the Rockefellers because you did something in your family that no one did prior to you.
Yeah, absolutely. And starting like from the beginning, and people don't know much about life insurance, right? Because everybody just thinks it's just for old people. Nobody realizes that that you can start very young. If you're just starting a family and you're got little ones, well, how do you set them up? Vanessa, you have we
Well,
have 3
Nicolette,
daughters.
like for starters, like for someone like me that had never even heard of life insurance, explain what life insurance is. Because I used to think that life insurance was so that you had a policy after you died, but that's not true.
No, that's not true. So you can open a life insurance policy for a baby the minute they have a social security number. And the reason that you want to do this is the same reason you have car insurance or homeowner's insurance, just in case anything happens, right? So you don't have a financial burden. But it's also building wealth within that child's policy as they grow. So imagine a child being born and their life expectancy is, say, 85 years old, right? And they have compounded interest growing in, say, a whole life insurance policy for 85 years. What they signed up for, what you sign up for, let's hypothetically say it's $100,000, that death benefit is just the minimum payout. It's not the maximum. So the compounded interest in the policy builds the cash value and it also increases the death benefit.
So for someone, they just had a baby, and if they took your advice and they're like, let's get them a life insurance policy, day one.
Yeah.
And you would say, well, let's put them into a $100,000 policy or a $250,000 policy. Are they able to use any of that policy as they get older? Are they able to use it for college? Are they able to use it if they're in their mid 40s, 50s as a one-time investment?
So absolutely. For example, I know a child, mine, that has 5 policies, and that was structured intentionally. Family members have gifted, I've gifted her policies. So if an opportunity ever comes her way, let's say one of her friends has this great idea for some new tech development, right? And wants her to invest in the company. She doesn't have to go to a bank to get the money. She could surrender her policy, or she could borrow from her policy because of the cash value that's built inside, and make sure that that opportunity does not pass her up. She would still have other policies to make sure she has a life insurance death benefit, but she would have the option, I should say, right? Because I've created options for her to take money out, purchase a home, purchase a vehicle, pay back only the interest, pay back the cash value, or pay back none of it, and surrender the policy, and still have multiple policies that she can leave to her benefactors.
Wow, so they can borrow from one policy because they have multiple, and the other multiples are not being touched and just compounding interest. And by the time they retire, or when their death benefit is going to be enormous for their family to leave.
Absolutely.
Right.
So this is a twofold thing, right? If you don't want the high premium for yourself every month, split it up into gifting. Have people gift each other life insurance policies. This is great in a family.
Wow.
Right? So whoever's paying it would primarily be the benefactor. But if you have wealth and you would like to invest in a life insurance policy, you can do a large amount, and that compounded interest is working for you with that one large amount. You can still borrow from your policy. You can buy vehicles, you could buy property, you could buy homes, investment property, and then you could either just pay the interest back or pay the loan back to your own policy.
Right. So, which goes back to what Vanessa was saying, is like, she just thought it was just a term life policy, just, you know, for people once they aged out. And it just kind of helped bury them, right? Their burial expenses.
Yeah.
You're having a completely different strategy with it, because you're not just talking about them at a younger age and investing in themselves, but you're investing in their children, and you're setting them up for what we call generational wealth. Right?
Absolutely. So Vanessa, I think what you touched on was a term policy. Term policy is exactly what it says. It's term. So a term policy is like renting an apartment. It's for the time that you're using it. So let's say you purchased a home and the mortgage is pretty high on the home. You want to get a term policy that matches what the payoff is for that home. And when you're finished paying the home, the term policy is up. But if you were to pass while you're paying for that home, the term policy has enough money in it to cover the cost of the house, maybe any debt that you leave. And so this way your spouse would be covered with that term policy. A whole life policy, the premium tends to be a little bit, I don't want to say more expensive, but a little bit higher, right? So a $1 million term and a $1 million whole life, they're not the same premium, okay? The whole life is with you your entire life, or a custom whole life, which is with you for a custom period of time.
Right.
You say to me, Nicolette, I only want to pay this policy for 10 years. And I structure it so that you pay it for 10 years, but it's the same amount you would have paid to age 100. But you now have this policy until the day you pass away.
So it's just compounding interest.
Absolutely.
Wow. And I guarantee most people don't know this.
They do not know that.
Right?
I agree.
So, you know, I know through some of our conversations, I learned, it's like, wow, like we've been looking at this whole thing incorrectly this whole time. And I'm like, and this is one of the reasons I wanted to bring you on, just to help educate people out there, because how many young people have no idea? Because one of the big things is, hey, I bought my house. But they don't invest in a life insurance policy or a whole home or a whole life insurance.
And then something happens and then they're stuck in a bind. They go into foreclosure, or they have to sell and go back into renting because they don't know they have this option.
Yes. And so like on social media, there's nicknames and phrases for things, right? One of the things is like mortgage protection insurance. People think that's actually like homeowners insurance, but it's not.
Right.
Mortgage protection is exactly what it says. If you're not able to pay that mortgage because you passed away, this life insurance policy comes into play. It's, you can get the highest amount for a lower premium. With a whole life policy, or otherwise on social media called the waterfall method, infinite banking, that is whole life insurance policies. And that's where you can bank on whole life. So you're building a bank account in your life insurance policy.
So, because especially anybody buying a home, obviously that's what we do. You know, I'm a lender, Vanessa's a real estate agent. They buy the home, and for the first year, they're getting the mailers coming in saying, hey, buy this mortgage life insurance. And they're like, what the heck is this? I get phone calls all the time. They're like, what is this? Do I need to buy it?
A lot of it is scams.
Right? And so that's where you come to play, is like, there's some out there that are legitimate, most are not.
Absolutely.
Right.
So my mom purchased a home here in Houston last year, and she kept getting them in the mail. And so she would give them to me. Anything that has to do with investments, finance, life insurance, my mom gives them to me, right? Read this. What is this? I said, well, yeah, we don't need that. And there's no one for you to talk to.
Right.
So that's the thing, like, especially with realtors, anybody in mortgages, referring your clients to someone who's going to educate them is super important. Just because somebody doesn't understand it today, it doesn't mean that next month or the following year they don't understand it and then budget for it. Because this is not another bill, this is an investment. And one is an investment in your future, and one is an investment to protect your assets as of today. So we live in the state of Texas. If you're a married couple, one passes away, the other one inherits the debt for that couple.
Right.
Right? So what happens if you don't have life insurance to cover the debt between you and your spouse?
Right.
You pass, you leave your spouse with additional debt that they did not have and no source of income because your income has gone with you.
Right. And so I think that's a lot of people don't realize. Like, my father passed 13 years ago. My mother's still with us, thank God. But when she passes, whatever debt that she has that she's accumulated that can't be paid off, we're taking that debt on. And a lot of people don't realize that debt doesn't just disappear.
Yes,
Someone's
that's true.
responsible for
Right.
it.
You know, so if there isn't a life insurance policy that can help protect that, right? Somebody's on the hook for that. And so if she were to leave her house, well, you don't get that house just free and clear. You get the debt that comes along with it.
Yes, so protecting your assets is something a lot of people miss. So the first asset is yourself, which is why I say babies can have life insurance policies, right? So these are future income earners. You want to protect them while they're little, because if they do pass while they're little and you are going to incur that debt,
Right.
most children that pass away, it's not sudden. It's usually long-term in the hospital, and then they have the medical bills and then the expense of the burial service. And nobody is in the right frame of mind when a child passes away to deal with any of that. So a life insurance policy helps to alleviate some of the debt that the parents would have. You also have an agent to advocate for you, to speak to the hospital if you want to, and to help you throughout your process to see what has to be paid for, how much money is left, and do you want to invest in another child that's in the home to make sure that their future is maybe a little bit brighter because of this unfortunate incident that happened to one child.
The next question I was going to ask was, someone that's wanting to invest, you have a young adult out there and they got a couple of kids and they're like, do I have to do this like forever for them, or can I do it for 10, 20 years? How does that work?
So it's going to depend on that person's budget. I never want anybody to commit to more than they can handle. So if someone has the budget to do a custom whole life, that's probably one of the best things you could do. So one of the policies my daughter has is a 20-year custom whole life. So I pay annually. That means I'm only making 20 payments, right? By the time I'm finished paying for it, she's a young adult and I'm retired. So I don't take that payment with me into retirement. But a custom whole life could be 2 years, 5 years, 10 years.
Wow, okay.
Yes, or you pay up until age 100. So let's say you wanted to gift, we were family members, you wanted to gift my child something, but that premium was a little high for you. So I could run an illustration that shows you what the premium would be if you paid monthly, annually, for the rest of the child's life, right?
Right.
Now let's say you pass away. You're not there for the rest of the child's life. The child becomes the successor to the policy, and they can pay the premium on their own policy.
Got it.
So let's say they're paying a $30 premium. They're paying that $30 premium the rest of their life. Imagine being 70 years old and paying the premium of a 1-year-old.
Wow. Right, because you started early.
Because you're locking in the rate. Yeah.
So, and if I pass, then hopefully I left them a policy that they can cash out, that where they can keep contributing into that, even as a young adult.
Absolutely.
Right.
And so that's like for the younger people. What about like the older people, such as myself, that I've been a realtor, I'm self-employed, so I don't have a company or anything that offers anything like this. But most people that have been self-employed and don't have any policies probably think it's too late for me.
No, absolutely not too late. So there is a maximum age for insurance, and it does depend on the policy. It also depends on if you're male or female, right? Because those rates can be a little bit different. But it's absolutely not too late in the sense that we need to figure out what kind of coverage you need. So there is mathematical equations to figure out your net worth and how much money you would leave. But that doesn't always work with everyone's budget, because if instead of investing to protect the future assets, they invested after the assets. So there's very little money left over. So when it comes to something like that, we talk about, do they want to leave any legacy? Can they afford to leave legacy? Or do you want to just eliminate the debt so your children are not inheriting the debt that comes along with paying off a house or a car, the things that they would like to keep, right? So for somebody that's a little bit older, your premiums are not going to be the same as covering a 3-year-old, right? But it's important that it fits into your budget so that you can maintain it and not have a policy lapse. But just like a child, you can have a custom policy for yourself. And for people who have a little bit more money and they're more affluent, there's like programs called paid up additions. So paid up additions is like, I have $100,000 or $200,000, $500,000 sitting around. It's not doing anything. So a life insurance policy is probate free. It is typically tax free, and it's creditor proof. So if a creditor is coming after you, they can't take the money in your life insurance policy, right? So it's a good place for an inheritance to be captive and still have compounded interest.
Wow, that's crazy.
That's crazy.
Yeah. So, one of the things that I wanted to ask while you were here is, why are trusts so important, right? And what do they actually do? Because when I bring up that word to most people, they have no idea what I'm talking about.
But everybody wants one.
Absolutely, right? Yeah.
So everyone wants a trust, and no one knows anything about a trust. One of the first things to do is possibly do a consultation with a trust attorney, right? To figure out if you can afford a trust. If it's a will situation or a trust situation, right? Because you need a certain amount of assets really to be putting into a trust, because sometimes
what's that number that they typically look for?
A trust can start anywhere from $7,000 upward. Some attorneys can scale that down a little bit for you, but again, it's, do you just need a will? Do you just need to change some of your paperwork to transfer on death? Or do you need a trust, right? So if you have property, you have children, you have money, you probably should have a trust.
Right, especially if you have business, like a small business.
Absolutely.
Owner, right?
So putting all of your assets in a trust makes the trust the owner. You're no longer the owner, right? So the trust becomes the owner. All the assets are in the... So when you have a life insurance policy, let's say you have $1 million life insurance policy, the benefactor is the trust. Everybody inside that trust, your wife, your children, everyone inside that trust becomes the benefactor of that money. This is the waterfall method that the Rockefellers used, which kept them going for generations. A new baby is born, let's get a couple $1 million on the baby. When the baby passes, that $2 million, let's say hypothetically, grows to $12 million. And then they leave that to the trust. And so for every generation that a new baby was born, they were getting bigger and bigger policies.
Yeah, it's just growing in
which
itself.
Which is why it's like the waterfall method. Yes. And so I've implemented this method in my own family, so that our next step is the trust. To put everything into the trust, my daughter's policies, LLCs, our home, everything, so that my future generation will benefit. And then I could also dictate from the grave.
There you go.
Because a part of having a trust is that you could dictate that the inheritance money that they're getting, where it goes. And it's going to be mandatory that bigger life insurance policies are purchased, and the other half is annuitized, and they can only live off of, if they choose not to work, right? Live off of the monthly payments that they're going to get from the annuities.
This is what they call the trust fund, baby.
Absolutely, yes.
Oh, interesting.
Yes.
I have no clue.
I'm changing my whole lineage to be trust fund babies. Absolutely.
That's what we're trying to create here, right?
Yes.
So
what's the one thing right now, a young person in college, give us your one piece of advice that you would give that person? Because, like, for example, for me, I had my daughter, when she was younger, just randomly say, I wish we were born from generational wealth. And I was like, well, honey, I'm a first generation American, so we're starting it. I was like, but you're the next one. Like, you have to keep that up and keep that going. What advice do you give to her?
So my kids are first generation American, because I'm not. But a part of being an immigrant here is looking for the legal loopholes that this country will basically provide to you if you're looking for it. I don't have this in Jamaica, where I come from, right? So here, building this kind of legacy in my family is super, super important to me, right? If you're a young person in college and no one has ever spoken to you about life insurance policy, the best thing to do is just reach out and get an illustration. I ran a quote for a 25-year-old female yesterday, and it came back to be like $22 a month.
Oh,
Wow.
wow.
Yeah.
That's a couple of Starbucks, right?
Super cheap,
Yes.
right? And then another one, actually a new agent that just brought on, hers was like $14 a month.
Yeah.
So it
It's a
depends
no-brainer.
on, it
And
depends
you-
on the policy
yeah.
you want. And a college kid really could get a term policy, and it could be as low as $14, $15 a month, even lower if they're in really good health. But if they have a little side job and they want to invest in a whole life policy, that's probably one of the best things they can do.
Yeah.
Because let's say they get into their 30s and 40s and they're not eating well, they're not exercising, or just out of their control completely, they have a health issue.
Yeah.
There's no denial. They already have the policy.
Yeah.
So this is a preventative before anything ever happens, before you're diagnosed with anything, before obesity comes in, before a decline happens. You would already have this policy and it'd be building compound interest in your favor.
Yeah. I wonder, like, just hearing all this, the curiosity of how many people, and you guys can comment, but how many people don't know that this was even an option?
Yeah, I was one. I was one that had no clue. No
Right.
clue. And when you go and say like it's affordable, especially for the younger people, like I have a few first-time home buyers that I'm going to send them to you, whether it works out or not. And she's not sponsoring us, like we're not getting anything, but it's important for them because they need to have something. They need to invest in themselves, not just go out and buy a house and think, okay, I'm set,
Yes.
and just build equity. That's good, but you also need to invest in yourself, as you said.
You absolutely do. And having someone that's trusted that you can speak to and be honest with you. I'm very honest with my clients, and I always send them literature to follow up on our conversation so that they can have a better, deeper understanding. Without having an educated decision made, you're just making a decision.
Right.
And I know tons of people who just have life insurance policies, but they don't know anything about it.
Right.
And sometimes they'll say, I have a policy. I'll say, what kind do you have?
Right. I have no idea.
I have no idea. And
Yeah.
then they'll tell me what they're paying and I could kind of figure it out. But generally there's like 4 types of life insurance. There's term insurance, it's very temporary. There's whole life, it's like buying a house and building equity. There's a variable universal life, that's more of the cash value building in that policy. And then there's a universal life, which really focuses on the death benefit over building cash value. So depending on a person's situation, how much premium they want to pay, how much money they want to invest, what they want to cover, that will decide what their premium is going to be, either monthly or annually, and how long they'd like to pay that.
Yeah, and when you're talking about term life, like a lot of people are like, well, I got life insurance and they turn 72 and then that life insurance is no good anymore. And then they live until they're 80 and they have no coverage.
Well, how about they have that group term from work,
Yeah.
and then they retire at 65 only to realize they have no life insurance.
Right, and they didn't invest in any of it and they're hoping to live off their 401k and that's just not gonna, it's not practical.
It is
right?
not practical. And if they have any kind of debt or they want to leave any kind of legacy, if the family hasn't put away burial money already, they're going to have to foot the expense of that burial.
Right, so when somebody's shopping, what are the biggest signs of a bad policy?
One, the client doesn't have any idea what the policy is. That's a really bad sign because what did you sign up for? What did they tell
You're
you?
like, I just got life insurance. I'm covered.
Oh, I'm good. Yeah.
You know?
Yeah.
It's like I pay my $100 a month. I'm covered.
Yeah,
But
I have
the
a client
reality-
that was paying $7,000 a year. She was young, owned nothing, was not married, had no children. When I dug into the policy she had, she was completely overly insured. Overinsured. Like, who are you? What are you?
Like, what are you trying to protect?
Yeah, she had like $400,000 life insurance policy, and she was paying $7,000 a year for that and long-term care, and she's 26 years old.
Yeah, it's just
I
somebody
took-
taking advantage. Right?
Absolutely. So I took a look at her policy, and I said, hey, we could do a 1031 exchange. I can get you down to $2,400 a year.
Yeah.
And in about 6 years, you'll be back up to your investment status. How does that sound for you? And she was like, oh my God, I feel so liberated. Like
Right.
I said, that agent didn't care about you.
So for a 1031 exchange, can you explain to the people that are watching this, like they probably never heard that before, right? It's like,
So when you have a life insurance policy and it has cash value in it, but you would like to move it to another policy. So for example, a variable universal life, that's for risky. You want to take a risk, you want risk takers, right? they are now at an age where they're closer to retirement. So they don't want to be in the risk pool anymore.
Right.
They want something a little bit more secure. And so they're going to do that exchange and go from a variable universal life to a whole life policy and lock that in so that that's a guaranteed growth that's just building at a fixed rate.
Yeah.
So that is a great example of doing an exchange. So 2 things to keep in mind though. How's your health? Because if your health is not good, you're not going to get approved, or you'll get approved at a higher rate.
Yeah.
But it still has to make sense at the end of the day, because we do have people who, even with the higher rates, say, I'm going to go ahead and do it. And they take some of that cash value to help pay for that life insurance policy. So it could be a win-win, right? You offset some of those gains, but to protect you with coverage for the rest of your life.
Right.
Yes. So you're not losing any of your money by being in the market, but you're also not going to be sitting here without any coverage.
Absolutely. And like before you were married, Vanessa, and you were a single mother, like what were the biggest things that worried you? One, for your kids, and like what's going to happen, like if something happens to you, right?
Right. Well, that was one of the reasons that when I was a single mother of 2 girls, I couldn't rely on just my real estate career because I was so worried, where's that next commission going to come from, you know? So I did have to find a full-time job to help me. But with that full-time job, you know, they offered benefits, and I thought they offered like short-term disability, long-term, but I had no clue what any of that was about. And I think they offered a little bit like a 401, which wasn't even like that great. But my biggest fear was, you know, something happens to me. What are my girls going to do? Or I get fired or something. What am I going to do? And I never knew that this was even an option for me.
Right. Because I mean, if you got into
I
a
had
car
no clue.
accident, right?
Which happens a lot.
Right. People get in car accidents, they're not able to work anymore.
Yeah.
And you know, their health declines, and then you're leaving all of that behind. I mean, I'm sure that's pretty scary for anybody.
It is, and it's a 2-part thing. It's kind of like where life insurance come in, but also disability. So the next worst thing than life insurance kicking in is you're disabled while you're alive.
Right.
And so your source of income is not there anymore. It's dried up, especially if you are blue collared, you work with your hands, you need your hands to work, right? You're not getting like paid time off, you own your own business. If you do not have disability insurance, what income do you have coming in while you are disabled? So if you have disability income, right, so you have a protection there and you have life insurance, let's say you do become disabled while you have the life insurance, right? There's a disability waiver in the life insurance policy where if you become disabled, the company pays your premium for you for the time that you're disabled. So if it's permanent disability, the company is paying your permanent life insurance premiums.
Wow. So yeah, I'm sure, and you know, that happens all the time. We actually have a family member going through something like that at the moment, right? Where they're not able to return right back to work, you know? So yeah, it's like, what options do they have for money to keep coming in?
Yes, if you have a life insurance policy, you could borrow from it if you need more funds. But I know with our company, the company will pay the premium if you're disabled. So if you're paying $300-400 a month for your life insurance policy, imagine that expense not being having to paid by you if you are on disability, right? But we also offer disability insurance, long-term insurance, because it all goes together. You're protecting yourself and your earnings. And think about it. Let's say you don't work, but you stay home with the kids.
Right.
Mike, how would you be able to work if Vanessa wasn't here staying home with the kids?
That's right.
Exactly, right?
It would really limit.
I guess I have to get what do they call it? A nanny?
Yes, and then where would the money come from for the nanny?
Right,
Yes,
exactly.
you either have to work more to create that because the safety net you had at home is no longer there. So now you can't work 12 hours.
Right.
What man is going to want to be in your house for 12 hours?
That's right.
Well,
They
yeah.
want to have a life of their own.
But you hit on a really big thing there, because most men like myself are like, hey, we just take care of everything.
And he worries about what's going to happen if something happens to him. He doesn't stop and think, what about me? What if something happens to me? And then he has to be a mom and dad at the same time and work full time.
Yeah, and I don't think most men are thinking about that, because we're just thinking the wife, you know, especially in my situation, she's younger, you know, but something could happen. But yeah, we don't realize how much the mother takes care of everything. And so if that piece of it is gone, most guys like myself, we would be scrambling.
And it's not even just the moms, because I know ladies that make more money than their husbands. It's whoever's holding down the house. If they're not there,
Right.
how are you holding down the house? And if you live somewhere where there's no family, what is happening?
Yeah.
You either have to hire someone to come in, or you have to find the funds to make things work in a different kind of way, either outsource the kids into childcare or something.
Yeah.
And nobody wants to do that because simple things like your child is sick, can't go to school. Who's staying home?
Yeah.
That already is like, which one is more important? Who has to do the meeting? And then someone has to cancel their day.
Right.
Imagine that for the next 20 years of your child's life.
So if someone's listening right now and they have 0 life insurance policies, what is the quickest way for them to get started?
So they could contact me. We can have a conversation about what they need, what they can afford, because sometimes those look very different.
Yep.
And we can run an illustration to see what that premium would look like. Then one of the best things to do is, if they're suitable, and when I say suitable, like healthy, no criminal record, so you can't be incarcerated because that's an automatic decline.
Yeah.
Unless there was something in the system where it's like, self-defense or whatever, you need a letter. So there's a buffer there. You have to have a pretty good driving record, really. So this insurance is based on risk, and that's really how you get your car insurance also.
Yeah, so if you're in a lot of accidents, probably.
If you're in a lot of accidents, you're driving the opposite way on the road. That's not an automatic decline, but those are reasons for premiums to increase on you.
Yeah.
So running an illustration, putting in an application, let's see how underwriting rates you.
Yeah.
And unfortunately, sometimes underwriting finds something in your medical history to peak you so that you can go and get some additional testing done. Sometimes people don't know something's wrong because their doctors never really fully spoke to them until they get a decline. And I have to be the one to deliver that decline and say, hey, you got declined for life
and I
insurance.
think that part of it is like, they do come out to your house. They do take blood work. They got to make sure, that you don't have a pre-existing condition, right? And, hopefully if you're a young adult and you don't have any issues. Then
And that's for anybody over the age of 18, right?
So the blood work is not always necessary.
Okay.
So over $250,000, there's usually blood work, but over 500 million, they want to make sure you don't have anything crazy in your system, right? Children are usually like an express issue because they're the healthiest that they're ever going to be. And if you do have to have a nurse come out to you, the expense is paid by the company, not by you.
Yeah.
Now, if you have some weird blood work, I just had this happen recently. A lady had a baby. She had some weird blood work upon having that baby, but that was the last blood work she had. She got a decline. But the company then said, if she gets updated records, we'll reconsider. So sometimes finding about your health and your medical, or your kids' health and medical, if they're over the age of 18, is super important, because I've had a lot of conversations, especially in the last year, with parents that their kids are living on campus, they're living overseas, they came home, they talk about life insurance, and then I got to deliver, your child was declined.
Yeah. That's rough.
Yeah.
So before I let you go, what is the cost of doing nothing?
It could cost you everything.
Right.
Yes, cost of doing nothing could cost you everything. Cost of talking to me costs you nothing.
Right.
So a lot of people think to have someone advise you in anywhere in finance costs something.
Right.
It does not always mean that. Now, assets under management is going to cost you something.
Right.
But getting basic information like this, because this is basically investment planning and protecting your assets, right? Costs absolutely nothing. I do financial literacy for high schools. I go into elementary schools, educate the teachers. We want this trickling down to the younger generation so that when they're our age, they've already asked these questions.
Yeah.
They've already said to their parents, I want to be a trust fund baby. They know the words that they want to use to implement in real life so that they can grow up and be extra successful.
Absolutely. Use this information to help educate your kids so they can educate theirs.
Yes.
Right? So,
yes.
well, I definitely enjoyed having you. Tons of education.
Thank you.
So if people are looking for you, how do they find you?
So you could find me on Facebook. My alias is Nikki Aiken because that's supposed to be my personal page. But when you are in a business like this, your personal and your business overlap. But you could also find me on Facebook as Nicolette Namdali. I'm on LinkedIn as Nicolette Namdali. And if you do a Google search, you'll find me. I also used to coach track and all the good things.
Oh, wow.
So I was around kids all the time.
That's a whole nother conversation.
Yes. Which is really, generational wealth, and children are very passionate to me. And having a minor child myself, I see and I implement my own advice. I'm not one of these people that is out there like, oh yeah, you can do this, but I'm not doing it.
Right.
No, I'm doing it, and I'm gonna do it and max it out until somebody knocks on my door and is like, hey, cut it out.
No more.
Cut it out. We don't want you getting all your generations wealthy and then, put all the financial industries out of business.
And then for you, Vanessa, how does somebody find you? Sounds like you've had a pretty good first quarter of 2026.
Yes. And if anybody wants to look for me, I'm Vanessa Homes and Loans on Instagram, on Facebook, and on TikTok.
And I'm Mike Mendiola. I'm your lender. If you like this content and you want to see more of it, hit that subscribe button. We'll have a lot more coming to you. Thank you for coming, and we'll see you next time.